financial argument. Follow us on YouTube.
Bo Polny on the other line, end of this telephone call from Gold 2020 forecast. Bo, how the devil are you?
I am well for giving me a call, and I look forward to speaking with you today, so thank you.
Yeah, well, Bo, you are very well known on the internet and around some of the left field speaking opportunities. I know you know Jeff Berwick, and you have made some pretty amazing predictions, especially around the gold area. You've absolutely nailed gold to the day when the low was going to be happening, and since that point gold has been going up. There's no two ways about it. That cannot be denied. But you've also made some other predictions about the world stock markets, and I've been focusing on the Dow, the DAX, the FTSE, and so on and so forth, and they have been going sideways. They've been dipping, they've been going up, they've been dipping, they've been going up, and I believe that's due to QE, otherwise known as quantitative easing, where the banks print money and they buy back their own shares. Anyway, Bo, give us an overview. Tell us about gold.
Well, with regards to gold, I would just say that, since our forecast, we scheduled an interview. We had an interview on December 3rd. On that day, we say today should be the low for gold. That low that morning came in at $1,045. And from that day forward, gold turned into a bull. And so it basically, the bull market resumed. That started in the year 2000 when it began initially at $247. And so the bull market has now resumed. That was the final low for gold. And then from that time point, as we've all seen, we've never since then seen $1,045 again. No one actually even believed that was a low, because every time the gold goes down, everybody keeps saying $1,000, and there's other analysts calling for $700 gold, and the problem is that it's number one, those numbers aren't going to happen because the bottom has already arrived. But it is not until recently where everybody's starting to get on the bandwagon and starting to realize, well, maybe gold really is in a bull market. The mining shares are doing incredible. When I was in Vancouver, I was speaking on stage the second week of January, and I especially did an interview there, and I basically said the mining stocks are bottoming today, or within the past couple of days they bottomed. And look at the mining shares. The mining shares from that point forward have moved up, and I think some have doubled, some have tripled, but they're, from the Huey being, I think, like at 100, and now it's just over 200, 220 or 230 right now. So the Huey, the mining index, has doubled. So that's a 100% improvement just in only a few months. So, everything looks incredible for the gold sector. We have incredible price movements still into the future for gold and silver. Why? Because these are still very low prices that we're looking at today for gold. Today being the 10th of June, gold last I checked was trading, I think, at about $1,271, and silver's trading at 17 1/4, basis 17.25. Did an interview 2 weeks ago when, again, what happened 2 weeks ago? What happened in May? Gold was going down, right? And all the bears came out. Oh, gold's going to $1,000 again. And then you had even a few of the guys saying it's going to go to 700. And on our turn work for gold, we had the end of May as a low. And that was, so we were looking, so we all went, so there was a point to go long. We all got out in early May. And we were supposed to go long again, or go basically looking for a turn to the upside in the very end of May, early June, and look what happened. Gold went down to a low of $1,201 was the actual low, and today it trades at $1,271. So again, perfect turn. So, every time gold goes down, the bear camp comes out, the analysts, everybody starts screaming for $1,000 gold, and it's not happening. It's not going to happen. We're in a bull market for gold, and we're gold is just warming up for incredible price action still this year.
You're not alone when you say that, because my brother is he's a hedge fund owner over in Australia, and I was speaking to him about gold, and he said, listen, Dave, they're not going to raise interest rates. And as we know, in December, Janet Yellen came out and she said, we're going to raise the base rate in the US by 0.25%. Very questionable whether that actually took place or not. And then they've been threatening to get it up to 2%. And of course, there is no reaction. And every time they don't raise the base interest rate, then people are looking at the bonds, they're looking at the returns, and they say there is no return, and they go to gold. Any truth in that, Bo?
Absolutely. That's a beautiful description. Well done on that. And what I would say is that it doesn't matter what the Fed says, gold's going up. Okay, that's it. And they're basically because if they do raise rates, well, that's inflationary. Well, that's great for gold. If they don't raise rates, they basically got called on a bluff, and gold goes up anyways. So it's a no-win. Gold's going up, and in the markets, they're basically all they got is just downwards price action. It's as soon as something major or dramatic happens, but gold's price action is going to go up. And and these prices are very soon to be never ever seen again. When gold moves, it's going to move hundreds of dollars. Okay, so the fact that a gold from the low of $1,045 to today is $271, so that's a $200 change. Okay, that has taken December, January, February, March, both say 5 to 6 months. Okay, that's a $200 move in about, say between then and now, say 205 months. We're going to see $200 moves in one day. Okay, when gold goes, these prices will be, people will have wished that they bought these prices, but it'll be too late, because gold will not move like it's done in the past 5 months. The next move on gold is going to be extraordinary.
But here's the thing, you've got to own it. You can't own paper gold or paper metal. You've got to own the physical. Now, I've got an asset, I've got a property in the heart of London, and I tell you, Bo, I'm selling. I'm selling because I think that market has hit its max. And people are saying to me, Dave Herschel, you're a nutcase selling in the heart of London. You'll never get back into that marketplace. And my plan is precious metals and diversification, but I'm getting out of the market. Now, what would you say to that? Now, I'm not asking you for your advice, clearly.
Well, just looking at what you're saying, but more so just looking at what my cycles are looking at, I basically see several things happening. I see a very powerful move in gold. A very powerful move in gold would be in reaction to probably a very bad move downwards in the equity markets or the stock markets, because as one would explode, the other would collapse. And as that happens, what I believe, the real estate markets, or the only reason real estate markets have value or have high values, better word, high values, is because the equity markets have high values. But the real estate market is directly correlated with the stock markets. So if the stock markets take a 50% haircut, if you look at the moving averages, you look at on a weekly basis, the 200-day moving average on some of the markets, the equity markets, they could collapse 50% and still be, within reasonable price valuations. So where the markets are priced now, it's insane. It's this is where it was in the year 2007, when everybody's, hey, everything's fine, buy real estate, and next thing you know, the real estate prices get cut in half. Problem with this collapse is it's, from I look at it from a cycle perspective and from charting patterns, is, this collapse, this crash that's going to occur, ends up being something that will affect bonds. So I think, there's an issue with bonds as well too. And bottom line is, it's just if the stock market drops substantially, which it will, just to get back to even in normal, price valuations, real estate will collapse with it. And so I think there'll be many, many buying opportunities for real estate in the future, especially if you own gold and silver, because, gold and silver, I believe, are going to go, in numbers that people can't imagine, because I believe that this price suppression, the manipulation or the suppression that we've seen for 5 years now, when it gets released, the numbers are going to be extraordinary for gold and silver, and so people who own the metals will be able to do some, probably buy some nice property in the future at very, very reasonable prices if they do hold precious metals.
That's correct. People think that when the market is going up, it's always going to go up. And when it's going down, it's always going to go down. And you've got to judge it. It's very difficult to judge it. Almost impossible. But I'm sitting here and I'm thinking, I've got to make a move. And a lot of people are in my shoes right now, and I'm scared to make a move, but I've got to make a commitment. And you know what? I've got to make a commitment to God's money, and God's money is gold and silver, and that's just where I'm at with it. So I'm committed. I'm getting rid of my assets and I think those assets are going to collapse. I don't know that for sure, but that's what my research is telling me. And I'm going to reinvest that capital, fiat currency. We all know that there's no inherent value in fiat currency. If you don't know that, look into it. You've got to start your research somewhere. But there's no inherent value in the pound or the dollar. We came off the gold standard in 1973, and so on and so forth. It goes on. However, Bo, right, when we last spoke, we spoke about the indices, the world stock markets. Now, you brilliantly bold, and you said these markets will come down at a certain point, and I watched those markets and they went down. I was short on the DAX, the FTSE, the CAC, the Dow, and the S&P 500. And they went down, and then it stopped, and I thought, wow, Bo's got it, and boom, they bounced straight back up. It was incredible, absolutely incredible. And since that point, the markets have been going sideways around the world, and I'm still waiting for the collapse.
Yeah, it all began with the Shemitah cycle, which, from a biblical standpoint, was the 7th year, was last September. And last September was to be a crash month based on the 7-year cycle, and there was no crash, and we were looking at the chart patterns, and we had an up cycle. So we were pretty much the only, I think I was pretty much one of the only people in the world saying that there will be no stock crash in September of 2015.
Drink Kangen. Kangen. Because it tastes good. Kangen is awesome. We love Kangen. Because I love it. The motor's the way forward. Keeps us hydrated. Drink nothing but it. Yes! We love it! Kangen!
And then we were correct on that. The markets from the August crash rallied back up into, I think it was late October, early November, and then crashed again in November, then into December, and then down into January, February. So that's what you were just speaking about, is a second leg down. And so we've had a top come in in 2015. A first leg down was the crash in August. Then there was a secondary rally, which came into the end of the year, early in the very, very end, let's say the end of December, and then you have the big crash starting January into February. So that was leg 2. And from that point, that was to set the kind of the spiral for the market to start crashing with lower highs and keep crashing down all the way into say December, into June, possibly early part of July. And instead, the markets they've been printing money, propping the market up. But all this, if you look at the chart, nothing's changed. The wedge pattern still broke in August. And we've had one leg down in August, another leg down in January, February, and now a rally month back up into May, June. And so all that's missing, because this is a triple top formation, and all that's missing now is the collapse. And so if you, interestingly enough, I think the DAX closed down last night over 250 points, and that would have been like, I think, the 9th or the 10th of June. So from this point, I believe the markets are turning right here, right now. And so we'll need to see how ugly this crash gets. But I believe the third leg down is beginning right now.
Well, that's very interesting, because the DAX has lost over 2% today. There's no two ways about it. It's the numbers do not lie. And we are heading into a period, over a summer period, which generally speaking is quite quiet, is it not? And when I look back through the cycles of crashes, they are around a 7-year period, as you say. And in 1929, and I tell you why I bring that up, is because I'm reading a book called The Alcoholics Anonymous, because I'm a recovering alkie, and in 1929 there was a crash in October. Now, is there something about October that we need to be aware of, Bo?
Well, yes and no. Now, in relation to a stock crash, we'll have to see. What I'm more concerned about right now is the events that lead up to October. So between now and October, what I have from a cycle perspective, and probably the best, I would suggest your listeners go to YouTube, type in my name, or type in gold 2020 forecast on the YouTube channel, and the top video that was just that we just posted on our webpage was titled June 2016 0 hour. Now, I would suggest listening to that. It's a 12-minute video, but in that video, I outline between the month of June, which is now, and October of this year, 5 events I expect are going to occur. Looking at our cycle work, and this is, we've had these patterns out for years now. But most importantly, is these 5 points are what I expect are going to happen. Number one is I expect gold fever to hit, because of a price move in gold that's going to be extremely powerful. So I believe gold and silver are going to have a very powerful move here shortly. I believe as that's occurring, or in reaction, the equity markets are going to crash sizably. So we should, so basically from today, if today is a turning point, as the DAX has already dropped over 2%, 250 points, I believe we should have a turn starting today. We'll see. And then in reaction to the crash that occurs, I believe they will turn the printing presses on, and we're going to really begin to experience hyperinflation in our world. So that will be the third point. And then again, in reaction to the crash, the real estate valuations will take a massive drop in value. So I believe real estate will crash or take a very sizable price drop, and then continue that for a long time. So this bounce on the real estate will not be quick. It's going to collapse and keep crashing into lower prices. And that's probably in relation to some type of a bond issue, because I think the bonds become people just started running from the bonds. I think they're not going to be assets that the world are going to want to hold, because everybody's going to be fleeing to things that you can hold: gold, silver, commodities. I believe that's where the money is going to go, into assets that can be held physically versus paper. So I believe the concept of faith and confidence cracks or becomes very problematic between now, June, and October of this year.
Herschel 36, I'm working on a brand new album. The best is yet to come. It's political electro punk. Click here, like and share. Interesting. Okay, so I'm just looking at my screen at the moment. The US 30 is down around 0.5%. The German DAX is down 2.77%. That's almost a 3% drop, right? The UK FTSE is down 2.16%, which is amazing considering the way the FTSE work. The CAC is very similar to the FTSE, and you and I in our previous interviews have already gone through your charts that clearly illustrate that when one market goes up, so do the rest.
That's right.
So they're all interlinked. Sorry, go for it, Bo.
No, and one thing I wanted to add is for the past few weeks you wanted to do an interview, and what day do we schedule? Today. Right? Why? Because my cycle counts potentially we're looking for this to occur today. And there you go. All the markets turned. So we'll see. But today is supposed to be just like when gold made a bottom on December 3rd. Today is supposed to be the turn to the downside for the equity markets.
Interesting. So the other point that I brought up was October, Bo. Because I know in your interviews you had said in March that this crash will happen between the end of February, beginning March, through to October. Now we had the panic of 1907. That was October. We had Black Tuesday, Thursday, and Monday, October 29, and we had Black Monday, October 1987 as an example. I think there are more October crashes, but it's just very, very strange. I'm a layman, okay, so I don't know. You're an expert. What would you say to that?
Well, here's the thing. Now, let me describe what a cycle is to you from a big perspective. I use Daniel's timeline to calculate the cycle. So basically, from start to finish, it's like driving from since I live in the U.S., it's like driving from Los Angeles to New York, and there's 10 cars leave, or 10 people leave, and they all know that on a certain day they need to be in New York, because that's the top, right? And so, but there's multiple ways of getting there. So the problem is the calculation gives you the endpoint, but not the route that you use to get there. So then I have to use chart analysis and patterns, and the stock market is probably the most difficult chart pattern because of the price printing and the manipulation that goes on versus gold and silver. So gold and silver, much easier to track their chart patterns. But what I can tell you, since you are bringing up October, if there is going to be a crash in October, and again, I'll know that as we get closer. Right now we're a little too far away still. It would be a secondary crash, not the first. So that will be the second leg down if there's going to be a crash in October. Or later in October, say into like the last part of this, latter part of this year. So hopefully that can.
So really, you're expecting something to happen June, July. You're expecting another major crash, as we saw in August 2015. You're expecting something imminently.
Right. That's what the patterns are showing us right now. So we should see something like that happen here versus. Waiting till October. So June is not over. We're only into the 10th of June, and July hasn't started yet. So we need to see what happens here in the near term. But so that's the best I can tell you on the equity markets or stock market. But today's, the fact that we scheduled this interview today, the fact that the equity markets are down over 2%, almost many of them. I mean, it's very, very encouraging what's happening today.
It is, that's correct, but we need to take into consideration that the US 30 Wall Street was up to 18,000, so it's again at its top. If we expect the US 30 to bash down to 6,000, which is a drop of up to 70% in its equity value, that is going to be absolutely humongous, and the ripple effect will knock everybody around the world off their feet. We are in for a ride, are we not, Bo?
Right. Well, that's the thing. See, being in the equity markets is extremely dangerous because from a cycle perspective, I can tell you that, being in the precious metals, owning physical gold and silver, you have nothing to worry about financially because you've protected yourself. You've basically bought insurance against paper. So if paper crashes, collapses, your asset of, gold and silver comes out and says, here, it'll pay you huge returns because of what just happened, basically because your insurance policy of gold and silver is paying out. On the other end of it, if you're being in the equity markets, you have to, again, big picture perspective. Cycles and patterns, okay? Triple tops equal collapses on the third leg down, okay? So I think you've known that. But if you look at, the past 20 years, you had a top in the year 2000. There's another, and the FTSE is a beautiful example of this. Go pull up a 20-year chart on the FTSE. There was a top on the FTSE in the year 2000, correct? There's a top on the FTSE. Since we're in Europe, let's talk about European markets. There's a top in the FTSE in the year 2007-8. So they're right in the end of 7 to early 8. And then it collapsed. And then there was another top in the FTSE in the year 2015, last year. Okay. However, since 2015, the FTSE has not gone higher. Okay. So you've got a triple top. Right. And then so the FTSE broke its wedge pattern in August, and then all that's done is it's gone up and down and up and down, but it made now in the past year, guess what it's made again now? 3 more tops on a weekly basis. So you've got a top in, I believe it would have been July. So I don't have in front of me, could have either May or July, but I think it was July. You had a top on the FTSE in July. Then you had a top on the FTSE at the end of December. And now you have another top on the FTSE, and they're all lower highs, I believe, or even if they're not, even if they're all parallel, they're all triple tops. And then you get collapse or failure. So from a 20-year perspective, triple tops. From a 1-year perspective, triple tops. And all that's happened now is you had the final rally to the upside, and if my cycle count is correct, we should be turning now. If that's the case, then basically the next leg to the downside begins here and now. And again, so now we're going to get crash legs. Now, so the cycles don't give me prices. That's the issue. So we need to calculate other ways. But basically, this crash should be worse than it was in February and in August. And then once that crash happens, we might get a bounce. And then we might get the issue that you're talking about for October, as you mentioned, for October being an ugly month. So we'll see. But first, we need to see what happens between now and October for the price patterns or objectives for the equity markets.
Fascinating stuff. Absolutely fascinating. Mr. Bo Polny from Gold2020Forecast.com. The video that Bo was talking is titled Much Watch June 2016 0 Hour Bo Polny. You can find it on Bo's YouTube account, or just go to the description underneath this interview and you'll see it there. Bo, quickly, last words for anyone who's listening to this and thinking, I've got to make a move, I've got to do something. How do people protect themselves, their families and their loved ones?
I don't want to give financial advice, but what I can tell you is this: if you feel in your heart, if you feel that things don't feel right, and you look at life and it doesn't feel right. If someone took, and this is a beautiful example because I think anybody can relate to this. If your net worth is X, you take 10% of X and you buy gold or silver, right? Now gold is going to go multiple of 10 times in the years to come. So over the next many years to come, gold will multiply by a factor of 10, which will put gold easily over $10,000. Okay, but if the equity markets collapse, as an example, and paper collapses, your 10% investment was nothing but an insurance policy you bought. And should things happen the way cycles are telling us they will, then basically your insurance policy of gold and silver goes out to pay you back, and you preserved, because the price of gold would increase tenfold, and your 10% investment, you will preserve your wealth. So you'll preserve your purchasing power into the future. So the point is it's important to be positioned. It's important to understand history. And see, the problem is, and Herschel, is in that video, you see, I basically go through cycles, and the problem is, this is the cycle that's occurring right now. It's a 252-year cycle. Okay, so basically, a generation from the Bible is 70 years. So 70 divided by 252 is roughly 3.5 generations. So 3.5 generations have gone by. And the problem is, every mother and father keeps telling everybody's grown up with paper, and they keep growing up with paper, and it's all it is. The Currency Act started in 1764, I think, and since that Currency Act of 1764, we've got 3.5 generations go by, and everybody believes that paper is money now. But as a result, what all that happens is that cycle comes to an end, and all of a sudden gold and silver become, have incredible power and wealth to them in terms of value, and the paper collapses. And next thing, and it doesn't have to collapse, go to zero right away. But the point is it'll be hard to get precious metals if faith and confidence cracks in the system that's been going on for 252 years. So that's the bottom line, is understanding. If you don't own gold or silver, you do not understand history. You don't understand money. You don't understand how the whole system runs and how it works. Because the bottom line is, history tells us that ultimately the world comes back to gold and silver, because that is money. That is the way to preserve your wealth. The problem is it's a grand cycle. So by not understanding history clearly, you've been taught to not believe in gold, but it's not the truth. So that's really how we can, what I wanted to say about that. And then if you're interested in timing points, so we've got, so gold has been going incredibly well. We have very, very accurate and, very exciting time points that, weeks and dates into the future. We include those within our gold index. So we, provide timing points if, someone's interested. But the point is that, you need to own gold. If you don't have any, you might consider doing, holding some in your possession and for the just in case.
That's right. Every family should have insurance for the car, for the health, for everything, especially your parents. And gold and silver is insurance, in my point of view, financial insurance for what may or may not come. You're not going to lose. So, Bo, let's wrap this up. Thank you so much for your time. Fantastic to speak to you. I wish the best for you and your family. But how can people get in contact with you?
Once again, so if you're interested in learning more, on my webpage, gold2020forecast.com, we have multiple a handful of old interviews that we've done. We've actually listed them all there. There you can actually find the actual interview that we did when we called the bottom in gold and made other forecasts. We actually did another interview in January in Vancouver, saying that gold is going to break out at the end of January. Well, we called that to within, I think, one trading day. So this is all the videos that we've done. Most of them there on our webpage, and interviews at the very bottom of the webpage. If they're interested in getting more specific details, getting my charts and my time points is key, then we provide that within our gold index. But I think the information that I provide, I think is, I don't know who else provides this type of information. So I'm glad to do it and try to educate the world and give people a fair due warning. I wish everybody well, and God bless.